Check one, two, three. Is this microphone on? Are we on? Are we doing this? YouTube, Twitter? Yes? Good?
Oh,
Okay.
full O'Reilly. Full O'Reilly.
That's right. We'll do it live. I'm going to say screw it because this is a family show, but you know what I meant.
Boy.
Spencer Israel here with Jeff Macke and Steve Strazza. It's a party. Guys, we got Apple and Amazon reporting. Amazon's already out. We should talk about that first, probably. Apple not out yet that I'm seeing, but they will be out very soon. Where do you guys want to start? You want to start with this Amazon report, Jeff?
We can totally start with the Amazon report. I made voluminous research notes on the Amazon report, and they kind of came in like about where you'd say, which is stuff was okay. It wasn't the end of the world, and we were just fine. I was interested to see that third-party sales, which is the kind of the heat zone. If you're going to drive a heat map of where China hits Amazon hardest, it's going to be in those 3P sales. They're incredibly profitable and largely Chinese. So about 60% of the sellers that use third-party Amazon fulfillment are using that. It's 80% of the profits from retail. That was actually much slower than it normally is. Normally, that's like a double-digit grower, twice as fast as the rest of the company. Not so last quarter. I don't know if that's a harbinger of things to come. I guess they'll talk about it on the call, or if I were on the call, I'd certainly ask about it. Because to the extent that Amazon really cares about retail, that's a big deal. In terms of the stock, we've turned a corner, baby. I'm giving Amazon a B plus on the earnings, just kind of sight unseen. It's a dirty little secret. Professor's just
you're
great
sight
stuff.
unseen or what? You can't do that.
Oh, I totally can. You think that doesn't happen? Grow up, Spencer. Grow up. It's a good student. There's a very smart student who does very good work. And unless I find something to make me think otherwise, I'm giving it a B plus. And I'm also long the stock. So maybe I'm a little biased, but that's fine. I'm just being honest about biases that other people bring to the table as well. Fair enough. I think they're pretty good. I think, we talked about, or I wrote about kind of, they just had to answer questions about what are we going to do? This is not the situation we want. Do we want to be having Jeff Bezos getting hot calls from the president of the United States talking about like different things they're going to put on price tags? Oh my God, no. But Amazon is an incredible deployer of capital, and they racked up another $25 billion in cash. So, but it's what am I really going to complain about? They tried to sell the stock off for about a second and a half, but that's just so last week. We don't sell dips anymore, Spencer. We buy them just like we do with Spotify.
When you say they turned the corner, Jeff, is it more about the way the market's reacting? Like, were the earnings?
Oh, completely. Oh my God, we've turned absolutely no. Fundamentally, it's a whole different conversation. Yeah.
Okay.
I don't want to confuse this with actual progress. Like that's not a real thing that's happening. No, it's just the reaction.
So, like this chart shows it, right? They've still been knocking the cover off of their earnings reports for the past 3 quarters. The market just stopped rewarding them.
Yeah. And because this is kind of in common, I always say the best catalysts are murky, right? It's the second you quantify something, it becomes less scary. And so these tariffs have been hanging out there like this sort of Damocles. I'm just going to scramble at metaphors until it hits with somebody. But, just a big scary thing, a monster in the closet. Come on, bear with me. But they're defining it now. They're saying, listen, this is bad. Obviously it's bad. Obviously we're working in the context of it, but the sky isn't completely falling. And there's some solace in that. Now, is there room for it to get worse? Absolutely. It's a ticking time bomb. And that's kind of why this rally is about 5% from like entering the conversation of the most hated rallies ever in terms of just how smart people are regarding like this insanity. But that's the way bottoms start as well.
So I feel like the market has dug beneath the surface, kind of finally done some hard work about where these companies are generating revenues in light of all of the trade war stuff going on this year.
Right.
Amazon, is there just a bigger, broader, more general risk looming over this stock over the long term due to the fact that 60, 70% of their products come from China? Like, is that something? I feel like we haven't heard the last of that. It's a big number.
We completely haven't yet. So much of their stuff. I mean, it's a nightmare for them. But what did happen, Steve, was this is kind of COVID is paying off a little bit in the sense that Amazon, like everyone else, really diversified where they're getting stuff. That's harder for Amazon because the answer is we get it everywhere. And the dirty little secret is we're running this flea market of third-party sellers that we don't vet very well. And it's super profitable. And we'd rather not have people highlight that. But you don't normally get 60% margins in retail. The other thing they have going for them in that third party model is just gorgeous. I mean, because they're fighting the retail war, and they're also selling all the missiles and doing all the rebuilding from the like towns that get firebombed. So they win no matter what. But that makes Amazon kind of sneakily levered to, if you get a deeper recession, they go from rolling up market share to losing customers on the AWS side. That side where they're doing fulfillment for companies, they're doing the third party sales, go in there. They make a ton of money. Their best profits are not made from selling you pencils or all the others. They're getting you batteries in an hour and a half. That's not really a good margin business. But all that other stuff, just charging somebody else to sell it, is. And so they're levered to the economy to the downside in a way that, say, Walmart isn't necessarily. Because Amazon kind of needs a healthy ecosystem that they can pick away at, like, say parasites might.
So, I mean, what you're saying, basically, the cloud margin, the AWS margin, I think is like, it's the EBIT margin's like 40%. It's like literally 4 times the size of the margin on their retail business. I think that's closer to like 10% in terms of EBIT. But how are they still growing it at this size, this level of maturity? Their margins are still improving out here.
A lot of it is just it's without them, you can't do much of anything. This is a company that sort of accidentally took over transportation. If you would have said that FedEx and UPS, if you would have said maybe 15 years ago, you know what, retail sales in the United States, like 20% of it is going to move online. Like, we're going to ship it. We're just going to take it from the stores where people used to go drive and pick it up themselves, and we're going to put a shipping component into all those orders. You would figure the guys in transportation would do pretty well. They might be excited for that opportunity to fulfill that business. Instead, Amazon just went ahead and built their own UPS as like a little side hustle. Like, hey, what we should do is come up with a zillion Amazon trucks and just have people deliver stuff all over the country. And I mean, that's a crackpot idea. If you're starting that from scratch, that's absolutely a lunatic idea. And yet we take it for granted now. I could probably order AA batteries at the start of this segment, and they'd be at my door before we got hung up. And that's the kind of operation they run. Now, again, all of a sudden that sounds super great, unless like you're the entire operation, then that makes you kind of sneakily levered up to the economy. They end up with no more worlds to conquer at some point, but that point isn't really yet.
I got one more for Jeff on Amazon here, Spencer.
Yeah,
sorry.
yeah.
When Microsoft beats the way that they did yesterday, and Azure was as good as it was, how much are you comparing the two? Like, seeing Amazon down 3% here, I know AWS was good, but how come the market's not rewarding them in the same way for their big cloud quarter like it just did for Microsoft?
That's a big question in terms of Amazon for the last few years, right? Because if you look at them, they kind of reached these levels like 2021-ish. And there's been a lot of noise. There's been a bunch of trades there, but it hasn't really gone anywhere. And part of that is just the stock getting cheaper. I saw Josh on TV today. He was just talking about how Amazon's actually cheaper than Walmart.
He loves it. Yeah. Josh is all in. Yeah.
I'm right there with him, and it was a little embarrassing. It's like, geez, I hope you read my stuff so I can accuse him of plagiarizing my thoughts, because it sounded like, it was just like me and Josh having a conversation about Amazon. We said, the exact same things, where if they miss, you buy more. They're just kind of one of the best companies ever in the history of capitalism, and you sort of want to be long. And also, I sold them when it was like the equivalent of 70 cents a share or something in 2002, and I'm haunted to the grave about that. And so
you could see it in this chart here, Spencer. If you throw up the zoomed out chart of Amazon, basically back where it was when the market peaked in late 2021.
Right, and that's a bonkers chart.
Kind of crazy.
And they have doubled revenue since then. Their earnings are, earnings look like a misprint because they had kind of outsized earnings last year, and they raked some of it. They're all screwed up from COVID. But just on the revenue side, they're twice as big a company. That's crazy. They're going to be 30 years old, I think, this year. It's in fact they are. That's what Prime Day is, celebrating 10 years. So they're 30.
And is that not the case with like the broader Mag 7 basket? The fundamentals have kept improving, but a lot of them haven't really made much or any progress at all since the prior cycle highs.
It's Amazon's such a different animal, right? It's because, like you say, AWS, that came in 17%. Some people had the whisper higher, some people had it lower. these guys just kind of are playing a different game, and they finally, at long last, have earned the right to be valued that way, for better and worse. And so when they're just exceptional deployers of capital. This started as a bookstore, and they're launching satellites this week because they're going to take on Starlink. Yeah. They're incredible. Just crazy, and they're not just good deployers of capital in terms of finding stuff to invest in, but they also bail. They made phones. Remember the Amazon phone? Oh, yeah. That didn't work out. And they buried the evidence. The evidence is probably somewhere under Bezos's yacht or something. I mean, who the hell knows it? We don't talk about mistakes. We celebrate victories. I mean, Prime wasn't even, remember, Prime used to be like, it was like, you buy the right to get some stuff in 2 days or less. Which stuff? Some. We're going to shoot for it. And now they're making $40 billion a year from Prime subscriptions. It's a pry it from my cold, dead hands type of product, which, by the way, it expanded again last quarter. And so that's one of the first things I always look at, because, to me, that's like Netflix numbers going down. It's like Spotify. I was talking about that with Spence earlier this week. These are companies that people just want to keep. They're subscriptions that, they're the last app that you cancel. And so, people start ripping out their Prime. It's abandoned hope, all ye who enter markets.
All right, let's talk about Apple here. Their earnings out at 4:30. This is a deja vu all over again. Apple, same story. It's a beat and a beat. We are down 1.5% in the after-hour session, so very similar to the initial reaction that Amazon got. Let's see if they buy that dip there. But like I said, a beat and a beat with Apple.
I'll say, Spencer.
Yeah.
When we came on here yesterday, we were saying the same thing. Like, these were great reports, and we were both kind of like 2% on Facebook, 3% on Facebook, and Microsoft started out 3-4%, and they kept on ticking higher. And then in today's session, continued to move higher. So maybe let them dance, like you were saying yesterday.
Yeah, I mean, everything that I'm seeing here from this report, from Apple, was good. Their iPhone revenue, which is, of course, their largest segment by a mile, came in above estimates. China revenue, that was a smidge.
They missed on China.
Services was a little bit higher. Mac revenue, which is not the most consequential, a little bit higher. iPad revenue, a little bit higher than estimates. So pretty much China, they came in light, but everywhere else was good.
I'm seeing services came in real light. 23.9 versus 26.7. Is that right?
23.9. Oh, yeah, you're right. I misread that. Yes, that's correct.
Miss. Yep. No, Jeff?
Yeah, you're right. Services. I mean,
it's last quarter was honestly a million years ago. It's these guys are they got to explain China to me. It's let's talk China, Tim Cook. That's question one on the conference call, and you sort of just let him talk for a while. And Amazon, frankly, is sort of the same way. Because it's as you point out, I mean, when you break down the numbers, and I did a little bit this morning in the research report, so much of their earnings from retail side come from that third party. And they got to talk about that. They got to talk about there are entire cities in China that are just dedicated to being kind of Amazon storefronts. There really are. Like just 100, just huge factories as far as you can really see. It's impossible to kind of imagine. But that's what it takes to fuel this beast. And so how fungible is that? Where do we move it? Where do you put it?
And Apple's similar. Apple's similar in terms of where the phones get made now.
I mean, they were loading cargo planes with phones, which sounds just bonkers. But, and when you're the size of Apple, it is just bonkers. You can't really do the Berlin airlift with iPhones. You sell too many of them. That's a lot of planes. Not even Amazon could ship 1 billion iPhones or whatever the hell Apple needs, just these numbers at this point.
Speaking of bonkers numbers, I mean, these companies are just built different. And the biggest thing that stands out to me, I mean, 100 billion.
Dude, I was going to say, so
it's just ridiculous.
Apple, they raised your dividend by a penny. Who really cares? But they just casually dropped a $100 billion buyback. Like,
love it.
Come on.
I'd rather have the buybacks than the dividends. Come on. They're doing the right thing. Love it.
It's these guys, not necessarily legendary deployers of capital. They're not going to come up with a zillion ideas. You push Apple for ideas, you end up with those goggles. And you say to yourself, you know what? You guys are really good at phones. I love the iPad. Right? Why don't you make more of those? Why don't you upgrade that a little bit and just let other guys do the R&D? So Godspeed, Apple, bring the cash back, because it's literally fountains of cash. If they tried to go out of business tomorrow, it would be like a century and a half before the revenues would stop piling in.
Yeah.
People would just be sending them money for forever. It's no one would cancel anything.
And I guess Tim Cook was asked, he's on TV about China or tariffs, and he said there was no noticeable pull forward effect in March or in April about the tariffs. So
see, I find that
they'll
kind of bullshitty. It's what are you doing with all the planes with iPhones stuffed in them, Tim Cook? But sure, okay. I mean, it's fine. Ford had 16% sale comps. So that seems like a little pull forward in cars. I myself actually bought a freaking Ford over the course of the month. Know how many Fords I bought before last month, Spencer? Zero in my life. So that counts as a pull forward. I don't know if Ford highlighted that in the release, but I bet you some people bought iPhones early.
Real fast.
Hold on.
Yeah.
I'm with you, Jeff. That's total BS. There's a well-known analyst out right now saying that this validates the iPhone outperformance as real demand, not timing related. I don't buy that at all.
Yeah. I mean, they're all the same.
I guess we'll have to wait till the next report in 3 months to find out how true or not true that is. Real fast. This is the chart from the Beat Report and from Koifin. This is showing the exact same thing that the Amazon chart showed, Steve, and the same thing that we talked about yesterday for Meta, Microsoft. The numbers are good, and for the past couple quarters, in Apple's case, it's been the past 2 quarters, and now today makes 3. The market has not rewarded them instantly. So is that going to change? I don't know. I don't have a fortune.
We've come down quite a bit, and these numbers have been pretty good. And it was definitely in play that Apple could yank their guidance. Maybe not after what we heard last night, but if Microsoft would have said, you know what, these are just weird times, and like China won't even pick up our phone calls at this point, so we're going to just kind of be conservative on guidance until we hear back from them about software. Like, no one really would have held that against them. And so the fact that the companies, at least so far, haven't been guiding down. Now, the retailers, like, we'll see in a couple of weeks when Walmart comes out and they let us know what's what. And that, by the way, would also be when we're starting to see empty shelves. That's the boogeyman. But what stocks are telling us now is you need a bigger monster. You need something scarier to bring me down, because it's these earnings aren't that bad. We're not euphoric, but we're 11% off the lows in kind of a straight line.
Well, speaking of guidance, Jeff, Amazon gave some. Apple has not yet. I'm not saying they didn't. I'm just saying they haven't yet. It wasn't in the statement.
Normally doing the call.
Maybe on the conference call, which probably starts in a few minutes here. So we'll have to wait and see. But I don't know.
Well, to that point, like you were just saying, Jeff, if any of these, mega cap growth leaders, Mag 7s, did pull guidance and say something like that, I think that would be pretty terrible for the broader market. I think that you'd see a lot of selling just off something like that.
Yeah. Yeah. At this point, you would. It's 11% off the lows. That's exactly kind of what the bearish case is. Really just buckle up, because the bad news is still sort of coming in. So I agree, but it's. They wanted to sell them. We saw this in Spotify last night. We saw it in pretty much everyone so far. They come out and they just want to take it down for reasons that are sort of, this missed, or, there's Kroner headwinds or whatever the hell Spotify said. And the stocks are just coming right back. And so, it marks a change in kind of the nature of how these stocks are being treated. And just the fact that we're not, we're taking the idea of a huge, deep recession that lasts many, many years out of play. Is it out of play? Hard, maybe. We still don't have a deal. Remember when signing a deal was kind of a thing that we were all looking forward to? That's apparently not going to happen. And we've just gotten over it a little bit.
I've taken the shoulder shrug approach to that stuff. I don't know. I just deal or no deal. I don't know. Right. So,
and it's not clear really anyone does, but again, we're seeing the supply chain flex. And so what Hasbro was really the tell, that stupid little toy company, but there's a reason I pay attention to these guys. And they said, listen, it's not great. Clearly we've got to move a bunch of stuff around, but post-COVID, we really leaned up and we wind our supply chain already, because they closed China then as well for entirely different reasons, but it was the same thing. You needed a bunch of different countries. They're not crazy about the 10% immediately. They're super not crazy about it going higher from there, but they can manage as is. Now, can it get worse? Yep. But as is, we've sort of done the damage, and now we're just waiting to see what happens in terms of unemployment, in terms of the actual real economy. And that's going to start in the next couple of weeks.
Yep.
Yeah. All right, that's a good place to I think to head out for the day. Just you know, talking about yesterday Microsoft and Meta, and then today Amazon and Apple. So now we're through the mega cap portion of the earnings season. We're still Nvidia's not for like a month, right? They're always like way off cycle, so we'll get to them down the line. But so far, numbers good, instant reactions leave a little bit to be desired, but it's early yet. You know, we had a good.
Listen to the company. Screw
another-
Wall Street. Listen to us, Spencer. That's our takeaways. We'll tell you what to think. I mean, it's it's down 2%. These people are sissies. Go out and buy stocks, folks.
Yeah, these are pretty muted reactions. Let's see what happens tomorrow.
Let's see what happens. I'm going to drop the link, some links in the chat right now. If you want to get the Strazza letter, he might write it. Steve might write about these reports. I don't know. We'll find out. Just drop the link in chat right there. And then I'll drop the link in the chat as well to Mackey's retail roundup. If you want to, Jeff, you're going to be recording. Normally you do your weekly video for members on Thursday, but today, you know, with the Apple and the Amazon and the earnings, you'll do it tomorrow, I've heard. So we'll be sending that out to your people. And you made a new purchase this week, which is very exciting in the Macke retail portfolio.
We're a little giddy. It's like bringing a new baby home, Spencer.
Oh, I like that.
I know. I'm making it personal for you, so you can realize my excitement. See that you understand how I feel.
Yeah. All right. You'll talk about that tomorrow, I'm sure. Everyone, thanks for watching. We'll see you guys tomorrow on the morning show. And for all you Apple and Amazon bears or bulls, good luck. I don't know.
Still game on.
All right. See you guys.
Later, guys.
Hey, these words.